Ladies and gentlemen, welcome to the midday market madness. But today, it's less madness and more joyous, let's say. Uh, in that regard, I'm more speaking about crypto in this sense. Ethereum has pushed higher. We are seeing essentially an 8% difference. And if you look this morning, we were at roughly $3,100 at 9:30. Currently, we're at 33.80 in the matter of just a few hours. The pump is real on Ethereum. You can see the volume here came in very, very hot. And same with Bitcoin as well. Not seeing as high of a bump, but still going from 90,000 to 94,000. Quite the increase in such a short period of time. Hopefully everyone is doing well. Tanner's buying more SoFi. I am. It is true. Not like a ton. I'm not doubling my position or anything, but I am picking up some SoFi shares. The stock is falling on what I think is a perfect setup for the company. We're seeing nothing but good news come out from management. I think things look positive. However, and this just recently happened. If we take a look at JP Morgan stock, for example, look at this. That does not look good, does it? Tanner, what's happening? Good question, random person. JP Morgan is saying, actually, Jamie Dimon specifically said that they are calling the consumer environment a bit more fragile and guiding for credit charge-offs to increase to 3.3%. That is, ouch. Okay. But if we go ahead and take a look at the other banks, Wells Fargo down 0.9%, Citi up 0.2%, little bit of a correction, but nothing near what JP Morgan is saying. And then Bank of America as well, down 0.5%, nowhere near where JP Morgan is saying, but still bleeding off a little bit. SoFi is not going to be immune to this either. They are considered a bank whenever it's, in the bear's best interest to sell off whenever they're a bank. And then they're a technology company whenever something goes wrong on the technology side. I guess that's sort of the problem of being a part of multiple industries, is you sort of catch the strays of every single potential problem. But yeah. Okay. We should do a poll for what the price would be after potential rate cuts. Well, I think that would be quite hard. Timeline, what's the range? I can only put 4 different prices in. But maybe just a poll on if it's going to go up or down might be interesting on a rate cut. Obviously, the chance of a rate cut is already very high, right? So it's not like if we do get a rate cut tomorrow that would come as a surprise to some people. I mean, maybe some people, but like, come on now. We're at a 87.4% chance of a rate cut. No chance of a 50 basis point cut, 12.6% chance of no basis points. And that is mirrored on the prediction markets, call sheet, poly market, pretty much holding up the exact same rates, which tells you that's really what the market is believing right now. Okay. How's Bitcoin doing? Really quick. Okay, still around the 94,000. I saw a tweet that came in that I thought maybe we were pumping, but doesn't look like that is the case. SoFi is pushing the biggest financial scam in history. And what financial scam is that? I'm actually curious. Like, I don't. Turtleneck is a known troll in the chat, so I'm not taking this comment seriously. But what do you guys think is the biggest scam financial product ever in history? Like, I think maybe some people would immediately think credit cards, but those have actually benefited a lot of people. And if used responsibly, they can be really great. I don't think it's student loans. I think they got ballooned much bigger than they needed to be, but that wasn't SoFi's fault. That was definitely the U.S. government's fault. Yeah. It could be a couple of altcoins. I guess those are just like legitimate scams, like actual rug pulls. That's probably that's probably the real answer. Taxes, you guys are funny. All right. Okay. Enron. No, I'm not talking about individual products. Did you see the news on SoFi and the Templum launch exclusive private market opportunities in Epic Games and Stripe? Yes. Yep. And they're in my notes, as well as I need to pull this up. But what I wanted to talk about, I think the SoFi Insider was going through website traffic, which is out. So we can talk about that as well for all their big, like all of our big companies. But let's go ahead and see this really quick. Okay. So one of the things that they noticed is that I don't know if this is SimilarWeb or not. It looks like SimilarWeb. It definitely looks like SimilarWeb. But on the SoFi.com domain, that many people, about 8% of the total outgoing traffic is going to secure.login.gov, which many people are starting to believe that maybe this is for educational student loans, something like this, which is seeing a big increase. The experience stuff, a lot of this is just the credit checking, everything like that. So that is going to be the big share. They also noticed that the one underneath that with the biggest share underneath and a 74% increase went to a PDF file. But that has not been disclosed either. So I am interested to know what this is about, but I don't think we know the full answers yet. But if that is true, and we're seeing some sort of massive explosion in student loans, you know, SoFi's taking advantage of the changes in what the Trump administration wants to do with federal student loans, potentially offboard a lot of those high quality credit loans, as well as potentially only partially funding some of the larger loans to certain institutions. Maybe SoFi is filling that gap, and that's why they needed an additional $1.5 to $1.7 billion. You know, are you bullish Adobe or Lulu ahead of earnings? I'm not anti those companies, but I'm not bullish them. I'm not. I don't have any bets on those names. SoFi acquiring BVNK? I don't think so. I know that Coinbase was acquiring that name and then they backed out of the deal. And I forget what that amount was for. Let me check. Coinbase, BVNK. I think they were trying to acquire it with, it was a $2 billion deal for a stablecoin infrastructure startup. And if I'm not mistaken, there was also something with MasterCard that had to do with this name as well. Or maybe I'm just thinking about the deal with Zero Hash, because they did acquire Zero Hash. SoFi made a minority stake in Zero Hash, which they're also using for their crypto payment projects as well. So working with Zero Hash. And then what was it? MasterCard then right after that raise bought the company, which usually means that SoFi is no longer going to have their minority stake, which means that, you know, they got a little bit of money from that deal. Quick turnaround. I don't know what the rate that SoFi paid. We don't really know the return, but it was definitely decent to get an entire company purchased right after a raise is usually at a good premium. Okay. SoFi is going to be a great 2026 play. I think so. And you know, for the longest time, I was saying that 2025 was going to be that year. And then whenever it came around, everyone goes, oh, well, you're just pushing out the time limit or the timeline. I was like, no, I still think 2025 is going to be that year. And I think 2026 is sort of that perfect middle ground between growth and pushing profitability. A lot of their products are now becoming standalone profitable, but we still have some. Credit cards are not standalone profitable. SoFi Invest is not standalone profitable. Last time that they told us about those two products together, they were actually negative $100 million a year on an annualized basis. Okay. And that was probably 6 to 9 months ago. If those products start to become just not even profitable to be accretive to their business, but just be flat, not costing SoFi money, which, if we're following their credit card business, has changed a ton over the last 6 to 9 months, going from, lack of new credit cards to giving a ton of credit cards and really ramping up that credit while also lowering defaults by like roughly half, like getting those defaults cut in half. But that said, if that does happen, I don't think people are, giving that enough credit for the catalyst that SoFi has going into 2026. You remove those negative impacts on credit cards and SoFi Invest, that goes straight to the bottom line. Just break even is positive $100 million. If they start to actually, contribute to that growth, that could be 150 million, maybe 200 million positive from where we are right now, let alone the growth that you're going to see across all their loan platforms, the loan platform business, all of these different things. So I think the setup for SoFi is perfect. Now, it is funny, right? Like, whenever you sort of think about SoFi, and this is maybe one of my biggest gripes with SoFi. I was listening to Amit's stream yesterday with 24 Golden, and he's like a extremely famous rapper slash artist, just in general, I guess. But he's an investor as well. He has a Robinhood account, and he's actively trying to put his money towards long-term wealth. And he has a bunch of Robinhood, but no SoFi. And Amit asked him, "Why aren't you investing in SoFi?" And he said, "Oh, well, I've dealt with them before, but I felt like they were more corporate, where Robinhood feels like more of a cultural moment." And I was like, "Yeah, I think that's completely fine. You can say that." And I wish that they did more retail outreach and engaged more with the actual community, and sort of did both, because I think SoFi has this stigma that they are this bank and slow moving institution, when really there's so much opportunity and there's so much growth. But yeah, it's definitely, I definitely agree with him there. Okay. One sec. I see my thing is a little dirty. I didn't notice it earlier. I don't think that changed a thing. Anyway, if it doesn't look smudgy, then we're fine, but it's just making me angry. Yeah. That's really funny. Steve calls me yesterday. He said, "I heard that your last stream ended and you were angry and you punched your monitor." I was like, "That's not even remotely true." But I guess like me, he does get caught by the stream. It's not my glasses. I can see it on the monitor, or on the camera lens. Yeah, the computer's absolutely smashed. I'm down to 3 monitors now. Okay. Let's go ahead and check on what big Wall Street, big money, smart money is saying about actually, I just saw this pop up. I wanted to see this. Okay. One of the concerns with SoFi not getting into business banking earlier is worrying that some companies are going to start getting to a little bit of escape velocity. Now, there's definitely been some big names that have appeared out of nowhere in the small business banking space. You think of Brex, Mercury, Lily, stuff like this. I just saw this pop up yesterday, but I didn't hear much about it. I guess they had them on CNBC to talk about this deal. I'll let them talk, but enjoy.
Joining us now in a CNBC exclusive on the news, Fifth Third CEO Tim Spence and Brex CEO.
By the way, actually, can I just double check? Did you guys hear that? I don't know if I did enable. Okay, no, audio should be good.
Franceschi, Brex, also a member of CNBC's 2024 Disruptor 50 list. Gentlemen, thank you so much for joining us. Tim, what does this partnership mean for Fifth Third from a revenue perspective and a customer perspective?
Yeah, good morning, Sarah. Considering what you were covering in your last segment, I'm going to say it's the payments version of the Netflix Time Warner deal. You get the scale and distribution of one of the largest payment banks in the country in Fifth Third, and the speed and innovation of one of the truly cutting-edge fintech platforms in Brex. And what it means clearly for us is the opportunity to transition what has been a fairly conventional commercial card processing business into really an AI-enabled spend management platform, which should have a huge impact on our ability to continue to grow spend and deliver more value for customers.
Maybe without the antitrust headaches, Tim. I think you'll agree with that.
Fair enough.
Okay, so Pedro,
we can only hope to grow that big.
What does Brex get out of it? Obviously, you're bringing your capabilities and sort of leveraging the startup relationships that you have and the tech relationships. How do you benefit?
Yeah, so for us, what's really exciting about this partnership is just the scale that it brings to Brex and the technology that we're bringing to customers. So one of the things we learned over the years is that if you look at the commercial businesses across the country, there's tens of thousands of mid-sized businesses that are Fifth Third's clients today that still run their finances incredibly manually, mostly using Excel spreadsheets and chasing receipts and having slow accounting closes. And with this partnership, really what's exciting is they're getting this 10x leap in financial tools with corporate cards that control spend before it happens, and AI that just automates away a lot of this busy work of chasing receipts, invoices, approvals, and so on and so on. So it's just thousands of hours of work eliminated, way beyond what a typical corporate card would do, but distributed through the banking partners and the banking relationships they already have and trust with Fifth Third. So this is a 1 + 1 = 5 scenario.
Yeah, Tim, maybe you could just make that real for us. If I'm a customer at Fifth Third, what looks different for me, and what does AI-enabled finance mean?
Yeah, absolutely. I think one of the interesting trends over the course of the past several years is you've seen the payments business migrate from being fairly processing-centric to being much more focused on workflow automation. So if you are a corporate treasurer or a comptroller in a middle market company, you have maybe a fleet of repair trucks, you have salespeople who are traveling across the country, you have recurring expenses for web hosting or cost of goods sold or otherwise. Historically, the process to reconcile the combination of the expense, the invoice, the general ledger to get accounted for correctly, as Pedro said, is terribly manual. And we provide today a commercial card that allows you to at least utilize card spend or earn a rebate or rewards as part of the purchasing process. But there still is a very manual exercise that has to go on to make sure that those expenses get booked to the right GL code. What we're going to be able to do with Brex is basically drag people into the 21st century and for the first time really to be able to provide AI to customers that automates a lot of that work and saves hundreds of hours on an annual basis, reduces fraud and other sorts of errors. And for us, I think Pedro put his finger on it. We ran a pilot earlier this spring in a couple of different markets where we utilized Fifth Third's bankers and existing relationships in Brex's product, and we saw a 10x increase in the sales pipeline. So maybe 1 + 1 = 10.
Yeah, it's interesting. I hope that SoFi does get in because obviously they have so many of these tools like corporate spending management and all this stuff through Galileo, an entire payment processor, right? They have all the tools to make a great business banking service. And just to put it into perspective, because I was trying to get a valuation on Brex, but it looks like this company has been valued as much as $12.3 billion. Okay, but that was all the way back at its height whenever people were like going gangbusters for new companies in January 2022. Now, supposedly, the market has decreased in their Series D2 round, if I'm getting this correct, and potentially IPOing closer to $4 billion. Mercury and some of these other ones are also doing very well, but like, think about adding a segment of SoFi's business that adds potentially $4 billion to their valuation. That's just valuation. That's not even talking about what potential new revenues, profits, or what have you is even added to that. The only problem that I would say about starting a new category is, like, we talk about credit cards and SoFi Invest being negative segments of SoFi's business. If we want them to have, 60 cents, 70 cents, 80 cents of EPS for next year, the more types of new business segments that they start that they have to pour new money into, well, like, we're not going to see the fruits of that labor for a while. And in fact, we're actually going to be hit with a little bit of a decrease while they open up new segments. So it depends. What if SoFi diluted to buy Warner Brothers Discovery? Do you know that Anthony Noto's on the board of directors of Warner Brothers Discovery? Isn't that funny? It's just crazy. Okay, let's see. Ethereum on the original run-up ended up seeing quite the appreciation over the last couple hours, but now sort of staying a little bit stagnant here. But I like it better here at 3,300 than I did at 3,000 or even 2,600 not too long ago. We can also check out BMNR, which we were able to get. I don't know what's going on here. Mumu's chart is broken. No one used this. Are those all wicks? Yeah. It's legitimately busted. So I'm sure I'll get another update from their thing soon. But $39.30, a lot better than being under. Webull has it too. Okay, well then maybe it's their data provider. But a lot better than being under $26 or under $25, where we were legitimately not long ago. 24.33. Everyone was calling him Scam Lee. It's good to be appreciating back. And then you have to think to yourself, okay, well, was I able to collect shares at this low range? And now what is that doing to my cost basis as we potentially return? Not the original skyrocket was a little much, but if we look here, that's essentially where we're at right now, historically. Hood charts show the same. Okay. Would you ever invest with Mumu? Yeah, I mean, they're a legitimate business. Like, I'm not, I just talk a lot of crap, but yeah, I mean, they are a legitimate brokerage. If AI replaces more and more white-collar, higher credit consumers, will this not affect the credit charge write-offs of these loans? Curious. If AI replaces more and more white-collar, higher credit consumers, well, yeah, but I think that's too early to even say. I'm not really a believer in that belief. I think AI is a tool that will be used, by people, not to replace people. So you don't have to believe that, but that is my belief. What's interesting is there is definitely a bear case to say, okay, well, if AI and some of these text-based models are replacing those jobs, that maybe a white-collar, higher FICO consumer is actually more at risk than the factory workers and the people that are usually found at the Chimes or buy now, pay later institutions that target a lower-end consumer. BMNR up 10.4%, pushing a little bit here. You're a tool that will be used by people. Hey, I guess, eh? Mod me so I can boot the clown saying sell SoFi, buy silver. No, I don't want people are you know, able to have their own opinions. I'm not worried about that sort of stuff. If they're spamming, go ahead and, you know, give them the boot. But I'm still down 26% on BM&R. What's your average? Did you buy any of you know, anything on the way down? First Amendment? There is no amendments in YouTube. Chris Patel is in NVIDIA. I saw. He got a position in NVIDIA, completely changed his stance, and now our portfolios are looking very similar these days. It's pretty exciting. I got to be honest with you. Dragoneer Investment Group LLC invested $295 million in Chime. That and the Goldman upgrade is nice. Where is Chime today? Looks like Jonathan Price is following the... Did we just hear about that news, Jonathan? Because that's quite the candle there. Are we running even higher? Holy. 24.25 up 1.4%. But a lot of that coming really recently. I like this name a lot. It's quite an interesting one. Yeah, me and Chris don't see eye to eye on everything. Obviously, he's been you know, not as positive on names like SoFi, and I think he bought it at like $5 and then sold everything at 10 and then went on sort of a tirade about how it's just a bank and everything. And so he's been loved and hated by the community. I obviously very, very much love Chris Patel. He's got a great opinion on stocks, but we do not see eye to eye on every single position. I might be early. Maybe he likes to time certain names more than myself, but I don't want to miss out on the runs that might keep running even after he has lowered conviction. Yeah, I'm not in VG or the cruise lines, and to be honest, that's been a good move for me. I like sticking in tech. It's what I know. I used to be in Carnival Cruises, a big name that I was buying back, sort of trying to come out of the pandemic, and did really well for me. But yeah, not anymore. Okay. Let's see. Tanner, would you ever consider taking a quick look at Sezzle? I mean, yeah, I definitely could, but I haven't yet. Also because like I've just literally, yeah, I don't know. I should look at Sezzle, but that's very funny. SoFi should dilute to buy VG. I would legitimately have to sell SoFi. Like, there is only so many acquisitions that they could make that wouldn't be thesis breakers. You know. Are you buying SoFi at these levels? Absolutely. Yep. Just made a student loan payment. Someone has to do it. Yeah. Okay. Let's go ahead and hear more about the markets. Let's hear from Josh Brown really quick, because he was talking about some names that I'd like to hear about, like Carvana. Let's have a quick little listen.
Hi, welcome back. Carvana is rallying again today. We highlighted it's being added to the S&P 500, as you know. And it is updated now. The spotlight shining on it, on the best stocks in the market list. I said the other day, I think it was, Josh, that the story from, what was it, mid-20, like 23, back it up, like 3 years, I think we showed.
December
from the
of 22.
depths of 22 into 23 until, and you told me then that it was going to be added to the S&P 500 before 25 was out. I said, you're crazy. And here we are.
I would not have predicted that with the stock selling below $5 per share and every short seller pointing out rightly all of the flaws financially with the company. But the thing is, they somehow pulled it out because the consumer has shown an appreciation for the way Carvana sells cars. And like in the end, if you have the customer, you could probably figure out a lot of your financial problems. So that's really the story with Carvana. And I think this was the first one we ever wrote up for best stocks in the market list.
Yeah, May
at CNBC Pro.
May 12th.
Right. So I think this was either our first one or our second one. But the point I wanted to make is when we first put a spotlight on it in May, it was in a 27% drawdown from that 2021 high. Like, it was not a winner overall, but there was something about the trend that was undeniable. And now you see what's happened since. The stock added to the S&P 500. And we're wrong all the time on that list. Like, we will spotlight a stock and it won't work. And we always, every time we write something, there's a stop loss, there's a risk management idea along with it. Because this game is not about batting average. It's not how many times do you write. It's how much do you make when you're right and how much do you lose when you're wrong. And I think having risk management is really important so that you can take small losses and you can ride the big winners. And Carvana, I think, exemplifies that idea. So we brought it back out today on the list to just talk about it.
I'm going to pivot you in a moment to a new one that's on the list, but just give me something quick on Carvana.
I agree with Josh, what Josh just said. We bought it at the end of October at 305. I think you have to be careful with Carvana thinking that it's a play on rates, because actually higher rates, sustained higher rates, and that's what we've had for the last 2 years, helps this company because it pushes more people into the used car market. That's allowed them to capture significant market share from CarMax. And this company has now profitable, which is absolutely phenomenal from where they were in December of 22 at $3.50.
Yeah, I mean, it says a lot about the consumer, which obviously, Josh, you continue to believe in, which leads me to a couple other names. A new best stock is Delta Airlines, added on December 3rd.
Yeah. So this one, I'm not ready to pull the trigger on Delta yet, but I'm going to talk about Delta and Expedia. I like the chart on Expedia a little bit better. Delta looks like it wants to break 70. You can see that 70 has been pretty substantial overhead supply or resistance, however you want to look at it. At a certain point, I think this one gets through, and that's probably where I get a little bit more interested in it as a trade. Expedia, I think, is viable right now. But the story that I'm telling here, very simply, the media wants for there to be some confirming evidence that the consumer is faltering, the consumer is slowing down. They're practically begging for it. When you listen to people interview the head of Delta, the head of Expedia, they're like, yeah, but isn't the consumer hurting? And the reality is that they're not. On December 1st, we just had an all-time record for the most passengers screened at an airport in the United States in a single day. 3.13 million people went through TSA on that single day. That is above every historic peak. The cruise lines are confirming this. The airlines are telling you no problems there either. RevPAR at the hotel chains, absolutely fine, 85% or higher nationwide. Every category from economy to luxe. So the companies are telling you that the consumer is not only not slowing down their travel, in some categories they're accelerating. So I like EXPE as the best stock in the market. I think it goes, and Delta maybe. We'll keep an eye on that key resistance level.
All right, Belsky, you have both.
Yeah, we own Expedia in the mid-cap portfolio we run. It was either by that or Bookings. Bookings was much more expensive. It's a $170 billion company versus Expedia, a $30 billion company. And I'll do you one better, Josh, on your chart stuff. You look at a near-term chart, looks like an old-fashioned cup with a handle chart, about ready to break out, which I learned the business.
Ooh, look at you.
You like that, baby? Oh yeah, here it comes.
Guy opens his own shop and gets all technical on us now. Right? Now you're a technician, using those 30 years of experience to branch out.
You like that? You know, you can teach this old dog new tricks. But also, too, on Delta, I mean, you know, Delta by far is the best in brand, best airline in North America, if not in the world, best operator. We've owned it for a long time. I think Ed's doing a great job there running that company, and we're going to continue to own that.
All right.
That's just great. One thing, because they were talking about airports, I also saw this little piece, which is a little off topic, but I hadn't heard about it before, so I did think it was interesting. A potential new $1 billion grant for airports across the country to build real spaces for people to move while they travel, potentially gyms, stuff like this. I don't know what this means for the smell of an airport, or the smell of a airline after everyone is getting nice and sweaty before being stuck in a tube. But that's would be so amazing if, you know, you go to the airport a little early, you're just sitting around doing nothing, burn off a little bit of time going to the gym. How sweet would that be? You know, and it doesn't even have to be like, I'm not even talking weightlifting and stuff. I don't think it'll be anything like that, but little Stairmaster before getting on a plane. Come on now. Yeah, I think there would have to be showers, but then they'd need to have, you know, quite the setup. Towels and laundry and, like, I don't know. It definitely does complicate things for stuff that is not often brought on a long trip. What if they have to run to the what if they have to rush to the plane? I don't think then you should go to the gym. It's not a mandatory gym. But I still think that's great, though. They're trying to get people to spend time at airports. Well, I think that it's, you know, they do want you to arrive there early. So then if, you know, screening takes additional time, that you don't miss your flight. You guys probably don't have that concern too much as Americans who fly, you know, nationally to other states. Like, obviously, there's a lot of pretty interesting spots within America. So a lot of the flights might be national. So the airplane, or the you know, going through the airport probably doesn't take too much time. But as a Canadian going through airports, I'm pretty good with getting through the airport now. But still, you always have backups that might not even be under your control. You guys want to know something? You guys want to hear my big conspiracy? I shouldn't even tell people this, because you guys are going to think I'm crazy, and all the health people are going to come out and bash me and say that I'm factually incorrect and yada, yada, yada. But I never go through the full body scanners. I always ask them to just check my pockets and stuff like that. Instead, I hate going through the machine. It always gives me a headache. I don't know what it is. Does anyone feel the same way? You go through the big thing, you put your hands up, whatever, and then I just feel like I have brain fog after. Honestly, it's not even like they call it a pat down. They essentially take a wand and then, like, touch every part of your body and make sure that there's not a drug substance. Yes, they suck. Okay, cool. It's not, well, okay, TSA to go through. Okay, if you work for TSA, yeah, okay, that might make sense. It might be in my head. It might be placebo. I don't know. But I'm perfectly fine. You must have vertigo? I don't know. I hate the scanner. I haven't gone through one in a long time. And there's only certain places like Philadelphia, man. That was the worst airport. And they made me sit there for like 30 minutes. They're like, okay, well, if he doesn't want to go through the scanner, we're going to punish him. The meeting tomorrow. So we'll know the decision of the meet at 2:00, and then the actual meeting's at 2:15. Okay, let's check on SoFi's under $27 now, $26.99. Oh, it just clicked up. I swear. Okay, I swear it was just under. And ETH, $3,376. Hoo-wee. Yeah, I don't care about the 3D scan if they could see my dong or whatever you guys are saying. I don't care about that part. It just makes my head feel weird. I always feel like I get a headache, so I don't go through it. I don't care about like any of that sort of stuff. Yeah. I know it's probably the most conspiratorial thing that I do. Someone said dong, bro. I just repeated in their lingo. Yeah, have you not seen the 3D scanners? They totally see your entire body. Like, if you're a guy or a lady or whatever, they could just, well, no, okay, I was going to say, but they could just see your private parts. I said ding dong. Okay, well, whatever. my Tanner banana. Okay. Lest we forget the bathroom conspiracy is not a conspiracy. There's no. Yeah. So no one's with me. I think I got like 2 people say that they opt out of the full body scan. All right, it might just be me. If everyone opted for it, I mean, security would be a lot slower. So if you guys see someone getting pat down beside the scanner, good chance it's me, I guess. That or like a pregnant woman or something. I'm in sensitive company for sure. You're certainly one odd. I'm not even at all. I'm not. I'm really chill about a lot of things. I don't complain. I'm the easiest flyer in the world. Okay, I put headphones in. I prefer an aisle, obviously. I don't know if it's just me, but I find 95% of men prefer the aisle and 95% of women prefer the window. And I don't know why that is, but that's something I've noticed. And 0 people prefer the middle. Freaks prefer the middle. Absolutely freaks. There might be a collective of you or a collection of you that are like, what is he talking about? There is no middle seat in first class. There is no middle seat on my private jet. We're not there yet, okay? We're working towards that. That's why we're buying Bitcoin. Yeah, they scan your portfolio. Amit doesn't like a window. There's not a chance. Yes, 100%. And then I don't have to bug anyone. I don't know if you guys have seen, but like yesterday we did our live stream. I was maybe live for 3.5 hours. I probably got up 4 times to pee during the live stream. 4 times. Imagine me on an airplane. Okay. It's impossible for me to buy a window seat. It's not going to happen. Anyway, bullish. What did he say? Delta, American Airlines. What did Josh Brown say? American Airlines up 1.4%. Delta Airlines up 1%. I'm not going to fake like I follow these companies. They're not even in my watch list. Galaxy Digital up 12%. FG Nexus up 10%. Bitmine up 9.7%. 8Co Holdings up 9%, which is sort of an additional benefit to Bitmine because they have $36 million in 8Co Holdings. We'll see. I'm the exact same way on an airplane, aisle only. Man of class. I tip my hat to you, good sir. JP Morgan down 4.55%. That's an actual bloodbath. That, like, for JP Morgan, that's crazy. Let's see what else was said about JP Morgan. Said the consumer backdrop is a bit more fragile, sees 2025 card charge-offs around 3.3%, expects Q4 investment bank revenue up low single digits year over year, Q4 markets revenue up low teens, and guides for 2026 expenses to be about $105 billion. Yeah. That's the news. Why'd Sentinel-1 drop on earnings? I think someone said that, by the way. the people that sit middle seat are Sentinel-1 shareholders. The middle seat is for creeps. Like, if you don't know the people that are around you, obviously, like, you know, if I'm flying with my girlfriend or whatever, I'll sit middle seat to put her in the window seat. Like, you know, us men, we just take the L. All right. All the girls just sighed, like, suck their teeth, like, oh, come on. Another guy giving himself a pat on the back. It's true, okay? I'm not throwing her in middle seat going, babe, I need the aisle. No, I fly like this. Okay. SoFi down 2.3%. It's for people who reserve seats late. It is, which is historically me. But I usually just try to buy whatever seat I can to make sure it's aisle. It's an extra, you know, $80, $100. I'm just like, okay, I'll bite the bullet. I want comfort. Tanner, what is going on with DLO? DLocal is not just a revenue play. What people are worried about is the sort of long-term changes in payments, and they are seeing margin compression. So the worst part about having a trend of margin compressing over time is that you allow Wall Street to then guide for, like, they model out that growth over time, and they're not trying to be conservative. They just essentially see margins falling off a cliff, and then they don't do anything about it. So DLocal is being hit with sort of a bear case that payments is just a endlessly losing competitive business. But they're not winning 60% year over year growth. Like, by the way, the LATAM, African, Asian sort of areas, the emerging markets that they're a part of, are not growing at 60%, but their revenue is, right? And it's not just because of all new merchants. Most of it is existing merchants that continue to double down with their platform. So, like, there's clearly a beneficial offering from DLocal that their competitors cannot offer. And while there is compression, and a lot of that is not even that they are compressing their prices, which is happening a little bit, but honestly, it's volume increases from larger customers, and then it's also a mixed change depending on whether it's pay-ins or payouts, right? They have different take rates. That if one is growing more than another, that can also affect total take rate because just potentially a lower margin business is growing faster, which is what we've seen over the last 2 quarters. Paul, Express Investing, Fly Business. Thank you, brother. I honestly don't know what you're talking about, but let me know in the chat. My wife is off on a business trip and made sure my lunches and dinners are planned ahead of time. What a winner she is. I mean, yes, I agree that sounds great, but like, what do you mean by planned? Like they're already made for how many days? I want to know. Oh, you should fly business. Oh, got you. Yeah, no, that that puts me that much closer. I just think it's a complete not waste of money, but it's not a waste of money, but it is such a large increase in price versus the value of my comfort for a short flight that I don't see the need. Like I'm not flying to Japan or something. It's usually like me flying to New York or to Vegas. And I'm like, well, I don't want to, 4x the cost of this ticket. Business only if flight is longer than 8 hours. Yeah, I think that's respectable. My wife and I have a rule that if the flight is over 4 hours, then it's business or better. Nice. I think that's a fair rule. SoFi might have done this major capital raise, $3.5 billion, to take advantage of the private student loans the government wants to turn over to the public market. That would be a no-do move for sure. However, in their latest fireside chat, maybe we can bring this up. So the only thing that's making me question whether that's the play is, hold on, is from their most recent KBW thing. I remember Anthony Noto talking about student loans. Where is it? Our average FICO for student loans here. Okay. Let's take a listen to this. I think this is the right place. If not, I know it's the right fireside chat, so we just need to find it, but where did that go? Here.
Student loans that? Student loans have done, so for those that don't know, we do 2 types of student loans. One is someone has an existing federal student loan and it's at a certain rate. Their credit score is meaningfully better than the average credit score that determines that rate when they graduated. And we help refinance them at a lower rate because their credit's better than what the rate is. They may have a 7% rate. We can refinance them at 5%, sort of like a mortgage when mortgage rates go down. So that product has slowly been getting back to a normalized level. I think last quarter we did just under $1 billion, and it's doing fine. Mm-hmm. We're not seeing any meaningful change in that business. The other business that we do in student loans is actually in-school loans that we've slowly been building over the last 8 years. One win behind the back of that business is the government's decision, and I don't think it's finalized, to stop funding graduate school loans or grad plus loans. So medical school, law school, business school. And so that will have to come from the private sector. We're happy to provide that financing for people that are qualified. It's actually an even more attractive loan than our student loan financing. Rates are meaningfully higher, almost 30 to 40% higher. Credit performance is actually as good as the student loan refinancing. And so it's almost 30% higher interest charged without a higher loss rate. and the funding costs are very similar. So that'd be a very nice business to add to SoFi. I'll give you a fun fact that we mentioned on our earnings call. We expect in the fourth quarter to generate more revenue in our home loans business than revenue we generate in our student loan refinancing business, which is a remarkable stat when you think about it, that we didn't have a home loans business in 2019. We closed it down. And student loan refinancing was the first business the company was founded on. Many people think that's the only product we still have. But it's nothing negative about student loan refinancing. It just shows you how far we've diversified the business away from capital intensity and a loan book that's unsecured.
And so for that grad plus opportunity,
there's another part. I don't know if it's just continuing. I don't want to. Maybe it's here actually, because maybe it's here.
maybe you could just talk a little bit while we're on the topic, student loan refi and the current addressable market for that and how it fits into the broader SoFi picture.
Yeah, I don't want to downplay it. It's an awesome product. The members that we have at SoFi, that's their first product or a good product or great members. They do many other products for us. It's just not going to scale the way the rest of the business is scaling.
Mm-hmm.
Home loans is going to be a much, much bigger business. I mean, it already is, and the rates are still relatively high.
Like, that is the reason why I don't think that it's about this. Okay. It's just not going to scale the way the rest of the business is scaling. Home loans is already a bigger business, much bigger business. Or sorry, home loans is going to be a much bigger business. It already is. Like, that's why I honestly think a lot of where this money is going could just be going into home loans. There's a bigger opportunity. They have like the TAM is huge. The amount of money is huge. The margins are great. And he's saying, I don't want to downplay it, but like, it's pretty small compared to the grand scheme of things. And then to go raise $1.7 billion. Nothing about this, which was said in November, sounds confident that he's going to skyrocket student loans. You know? That's the only thing. Well, that's another thing too. A lot of the student loans, like whenever you listen to how big the TAM is of private student loans, or sorry, federal student loans that could go private, the high majority of that, SoFi wants no part in. You know, these were guaranteed loans for people that did not like that needed that guarantee. Okay. Which means that maybe their FICO's not in the right mix. Maybe their payback history is not great. Maybe their income is not great. SoFi wants no part in that. Home loans, I mean, you already have to be at a certain level of income in order to be a homeowner. You need to have a good FICO in order to, be a homeowner. So you're already pushing it into potentially a better business, better chance of repayment, secured loans, by the way. And we talked about this before too. Whenever, and I don't know the exact ratio, but I'll give you guys my sort of thinking behind this. And the thinking is right, but I just don't know the exact statistics behind it. Some bank nerd in chat will. But whenever we were talking about risk-based capital ratios, the key there is risk-based. Okay? Like, whenever I said, if they raise $3.4 billion, that actually opens them to lend out $33 billion more. Well, that's only if you're really doing personal loans, which are sort of a 1-to-1 in that ratio. Okay. If you look to things like home loans that are collateralized, that are much safer, it does not actually count as a full dollar being lent out. So you can actually lend out more home loans than you can student loans because it's considered safer. So it is risk-adjusted ratios. So SoFi can go actually much farther with their leverage, lending out home loans than they can personal loans, which is also interesting. Yeah, we got to have some bank nerds in chat. Come on, show yourself. let's see. If you had a close relationship with Goldman Sachs like Noto does, then okay. Thoughts on Amazon for the next 6 months? I would never buy Amazon for a 6-month period. Like very few companies do I even trade regardless, but there needs to be a massive catalyst. And whenever you're talking about, multi-trillion-dollar companies with big catalysts that are really, really going to make that risk to reward like a really tradable option, I don't know if that's going to be the case for Amazon. There's some things maybe over the next 6 months, but really I think that the theme of investing for Amazon should be a 10-year outlook and then enjoy the premium that comes a little bit earlier. So if you invest with a 10-year outlook on Amazon and then they end up seeing a big boom in cloud and in robotics and full self-driving and margins really do very well on Amazon.com. And that won't even be the case, by the way, because they'll push a lot of that margin back to the consumer, offer a lot more for customers for the same sort of rate for Amazon Prime. It's just been the way that they've always done it. Your margin's my opportunity type thing. But let's say that they see a big benefit to EPS. Andy Jassy, I think, is that good mix between Jeff Bezos while also being concerned about shareholder return and EPS. So I do think that there is going to be margin appreciation on Amazon over time. But for the next 6 months, I wouldn't bet that way. Personal preference. AWS is Amazon's largest growth driver. How can investors be bearish on CapEx spend? I don't think that they should be. I think ads will do very well for Amazon. That's become a massive part of their business, high margin as well. AWS is doing very good. Yeah, I think that they will appreciate. I'm very bullish on Amazon. I just can't say something specifically for a 6-month time horizon. Okay, so about to spend my lunch watching the GOAT Future Investing. Bob, I appreciate that, but I hope you have a short lunch because I think today's going to be a little bit different. I'm going to try to wrap this show up in the next 20 minutes or so, and then be back at 7 o'clock to do another hour and a half to talk about things that I haven't fintech website traffic, some Chime DD that I've been looking at, maybe some new news that we see over the, course of the day, stuff like this. I think going forward, I might end up doing that. 2 streams, hour and a half each, keep the info fresh, allow me to, break it up a little bit. That way I can sort of give the gents that like the noon streams, and then also the wonderful people that like the 7 p.m. Eastern Standard Time streams as well. Try to hit both of them. But do you guys think that I should sort of do it at noon or at 1? Because if I do an hour and a half, the problem with doing it at noon and why I've shifted this to sort of 1 o'clock recently is that if I do an hour and a half, going from noon to 1:30 kind of is not a great time slot. Going from 1 to 2:30, there's a lot of announcements at 2 o'clock from time to time. You think FOMC, you think some of these events, a lot of that falls at 2 o'clock. So that kind of allows us to still watch the meetings, still see some of the Trump announcements, stuff like this that can really affect markets. Yeah. Um, 1 to 2:30, 1, 12 to 2:30. Well, now you're getting greedy. And that's straight greed. Noon to 12:30. I'll do a poll. Okay. When to stream. Remember, this is EST, okay? (1 p.m. to 2:30). Also, do you guys have what do you guys think about that plan overall? What do we think? Oh, shoot. Okay. (9 a.m. to 4 p.m.). You think I could do that, but like if I wanted a real job, I would have got one, you know? I'd rather work much harder to not have a job than the other way around. Let's go ahead and watch this video really quickly. I've not seen this full interview. I've seen a part of it, and it was amazing. By the way, Johan, I've met him a few times in real life. I honestly think I'm not... Maybe I shouldn't even say this. But he is one of the smartest people at Robinhood. This dude is a genius, okay? Extremely hard worker, super competent, big fan of his, and like he has probably made Robinhood so much money. Anyway, let's have a listen to what he's recently said about Robinhood. Now, I've only seen a portion of this where he was talking about the reason why they picked Ethereum. I haven't seen this full interview, but let's take a listen.
You know, you see a lot of companies right now building their own L1. And for us, we felt excited about this idea where we can control anything that we want to build, and we don't have to deal with any other chain to talk to or anything like that. But at the same time, creating the security of a real proper decentralized chain is extremely difficult, as you know. And we basically get that for free with Ethereum. The network has been going on for a very long time now, and you know the security is stable and it's decentralized. And I think that's really the key 2 points that we wanted to have. When you look at some of these new L1 that are being created, it's not really decentralized and it's not really secure. So at the end of the day, you're basically having like a fancy database that is probably a bit slower to use than an actual database. And so we didn't really see the value in that. With Ethereum, we get the security by default. The second thing that we get by having an L2 is that you get all this liquidity that is already part of all the EVM compatible chain. And that was also a very important decision factor for us. If we really want to bring the stock market into the chain, we need to have this liquidity. It's not going to be possible if it's in a closed loop or in a closed chain that nobody can access, and you need to have like 20 different hoops before you can bridge to that chain. So for us, that was kind of the two elements that we really wanted to focus on, and that's why we decided on building on Ethereum. And then we decided on Arbitrum mostly because we love the technology. There's a few things that we are excited about. For example, Stylus. It's a way that we can basically use different language into the chain, and we can build on top of that. We also have like the way that they prioritize transaction that is, we think, a better way than some of the competition. And so basically we'll use the Arbitrum stack and we'll create our own L2, which will make us also compatible with all the Arbitrum chains. And so we think it's kind of the best of all the world. But for us, the idea is like we will start with public stock, and then we think that you can tokenize anything really, not just stocks. You can it can be private stock, it can be art, it can be real estate, whatever you want to think of. And so we really wanted to have a platform that is kind of easy to build on, and we can keep adding on it. At the same time, we know that regulation are going to be hard on some of these products, especially when it comes to financial products. you always have different regulators. You have different rules depending on the region. If you're in the EU versus the US versus LATAM, and so we felt like we wanted to have our own layer that we could customize for these needs. And then anyone that is building on the chain will also be able to benefit from what we are building versus just putting everything in a contract that will be just good for the people that are using the Robin contract. But so at this point, we announced the chain in June. We are in private test right now, and then we'll do more announcement in the future.
Johan, you're invited to the stream, bro. Please come. Yeah, it was really funny. I saw him like in a group of people at the Robinhood event, and I had like legitimately an unending number of questions. I just like sometimes whenever I'm interviewing people, I'll be like, okay, well, what's a question that I could ask this person? Because I'm newer to the crypto space, and he's leading, and especially leading in a company that I know decently well. I just had like, I probably could do like a 4-hour podcast with him alone. Incredible. He honestly like could probably start his own project or something. I don't even know if I should say that, but like, he's a smart dude. SoFi has been consolidating. Next leg up is coming over the next 2 to 4 months. So patience is required. Okay. All right. I have Robinhood banking. Y'all using it? Honestly, I've not heard anything from Robin. Like, I've heard a lot of people say that they have the alpha, or that they've gotten access to it. I've heard nobody say that it's good or bad, which is usually not a good sign, to be honest. If everyone says, oh, I just got the invite, and then that's sort of the end of the chatter, I don't know if that's a good sign. Tanner has a man crush. I like smart people, Okay. Can we talk Waymo really quickly? Oh, that is so funny. 3 Waymos had gotten caught in sort of a traffic jam and then just completely stopped because they didn't know what to do. And they sort of jammed each other up in a circle. That's great. I can't really show it. It doesn't show well, but anyway. On Waymo's side, however, they announced that they had seen quite the increase in total amount of weekly rides, per week. So in May of 2023, they were doing 10,000 rides a week. In December of 2024, they said 175,000. And December of 2025, 450,000 rides per week. Boy, oh boy. They also announced yesterday that they were starting to do commercial services in London, or at least getting ready to do commercial services in London. And let's take a quick peek see here really quick. Waymo weekly rides. Look at this. How fantastic is that? May, 250,000. December, 450,000. I'm curious, is it still sort of a vanity factor, or are people taking this to work? Do people prefer a Waymo versus a Uber ride? Do they feel safer in this because there's not a stranger in the car? I'm curious to see the reason why it's exploding. Because I remember whenever we were in San Fran and we were looking at, obviously there can be weird pricing and surge pricing and stuff like this that affects these prices, especially whenever they're at low volume, like low amount of total vehicles, that things can change really quick. But I swear this can be verified by Roy and Amit, because we all took the drive together. We were taking an Uber ride, and the cost of the Uber was something like $11, where the Waymo for the exact same destination from A to B. And by the way, point A, they don't even pick you up where you are. They're like, hey, why don't you walk half a kilometer or a, third of a mile to then meet the car where it is. So it definitely is still not even that good. And then you have to get in. It was $22 or $23 versus an $11 or $12 Uber. That was just specifically for one ride. The other rides that we ended up picking between a Waymo and an Uber, the price was either the same or a little bit slightly more expensive for the Waymo. Now, what does that mean? Are they charging because they need to, or are they charging because they can? Because people are taking it almost like an amusement ride. Like, because we had our phones out the entire time, just like recording the experience. Yeah, I don't think the Waymos you're allowed to get in the driver's seat, but yeah. Okay. Hood offers 3.5% on checking, savings, and uninvested cash in brokerage. Yeah, I mean, that's fine, but what's the experience like? You can get pretty high rates at other fintechs. I think it's more about how it feels. Like, and everyone thinks that's not the case. You can go and get like a lot of money at Lending Club. Lending Club, they offer great rates there. No one uses them. No one. Why is that? The app is sick? All right. Obviously, I do think Robinhood banking will be used, and especially the cross-sell from an extremely popular brokerage into a bank app will be a pretty good cross-sell, especially for high net worth individuals. Like, I do think it'll be great. The credit card's top-notch. Like, they have a really, really great offering. I do think that they'll be a financial super app. You should ask Amit his opinion. Yeah, but my understanding is he's had it for like 4 days. Should I go to CES? Should I go to CES and try to see some of the new tech there? That might mean that I can't stream during those days. And I think it's 4 days long. Did I hear that you're the new SoFi guy? What does that mean? Webull got listed in the Russell 2000 index today. Let's take a look at the stock. Oh, come on. Up 5.8%? Yeah, I mean, that'll do it to you. Yeah, Webull definitely deserves to be there for sure. No, I've been a few times and it sucks. Okay. I mean, that's fair. No, not I'm not working at SoFi. Data-driven investing is working at SoFi now, which means that he can no longer talk to retail about SoFi. CES was good before 2017. Now it's whatever. Yeah, but like, I don't know. What if there's going to be, Nvidia and Google and Samsung, like all these companies, and I think I'd like to see what the heck is going on. Potentially meet some of those people, potentially set up future like interviews on the show. I think just like for the channel, it might be the way to go. But I don't know. Denise Dresser, the Slack CEO, is leaving Salesforce after 14 years to join OpenAI as Chief Revenue Officer, leading its enterprise business and reporting to COO Brad Lightcap. I mean, dang shame. I'm the tech junkie that buys everything announced at CES. Yeah, I also really like just tech as a hobby. Do you like to trade 2x leveraged ETFs? Not personally. They're getting popular, but if you're not trading them intraday, I think that it's probably not the best thing to do. There's better ways to get leverage than going through those ETFs. So I don't use them at all. I did sell PayPal to buy SoFi. I did that whole transaction yesterday. I'm stuck in Robin. Yeah, but like, what do you mean you're stuck? You're gonna have to just sell it. Like you're the longer you wait, the more like you're just getting eaten away by like the margin. Like there's a cost to hold those ETFs. What are you waiting for? If you're worried about Robinhood going up, either I don't know, sell Robin, buy Robinhood, buy Hood, or I don't know. I just got a DGX Spark. Jeez. That's crazy. Aren't they like $4,000? That's like the entire cost of my computer, let alone just a DGX Spark just for, running some insane model or something like this. I don't know if, yeah. It's hard to stick into something looking for a recovery while you're getting eaten away on margin, especially like what's your catalyst in order to do that? Yeah, bag holding is counterintuitive to trading. Agreed. No, I think it is more opportunity cost. I like PayPal. I think the company's good. I like Alex Chris, but I think they've been extremely bearish on how long the turnaround is going to be in some of their latest fireside chats. I didn't like that stuff. It really is like turning around a cruise ship. It's just going to take forever, and SoFi can just move so much quicker. And I just like that a lot. Yeah, Parsifal's helping out the Nvidia revenue, which didn't even need help, but we appreciate it. I recently bought PayPal. Yeah, and like to each his own. You might be right. For me, it's about conviction. It's not about like, oh, is it? I need to consolidate my names down. I've been doing a lot of just like picking certain names, and I think, Axon's going to do well, and Reddit, and like all of these names, like they're probably just going to do well over time. But which ones do I like the most? Which ones do I know the most? Which ones could I explain to a 3-year-old? That's sort of the important part. Okay. Would you sell a HIMS position for SoFi right now? I mean, me personally, yes, because I'm not a HIMS shareholder. But it doesn't mean that I think like that would just be an information gap. I don't follow the company. I don't follow the space. Maybe HIMS does better, but I wouldn't be the one to know that. PayPal is huge in EU. Yeah, but the markets understand that. Like the idea that something is bigger than people realize is only important as like an extremely hyper growth business or a private company where we don't see the financials. I don't care if they're big in EU or US, or if my neighbor is using it, or if no one in my immediate circle is using it. I know 435 roughly million people are using it. I know how many transactions per user are being done. I know the total amount of dollars transacted on their platform. And I know how much revenue and net income that actually generates and the margins that accrues just as a business, right? I know the space in payments. I know that there's margin compression there. I know that there's strong competition in Apple Pay and Adyen and Stripe, and they don't want to maybe admit that, but that is true as well. So it doesn't necessarily like that information advantage is not really an advantage. It's only the matter of do you think that they are going to grow faster than expectations? Do you think that they'll surprise on the growth on the upside? And why is that? Look into HIMS more, Tanner. It's not just a health stock. Tech. No. To me, that's a health stock. Like McDonald's has tech too. I don't really care about that. Nvidia has, plays a big role in healthcare. I wouldn't call it a healthcare name, When's the Fed meeting? Tomorrow at 2. Unless I'm wrong, I think CES is limited to people in the industry. You can't just buy a pass at the door. I got invited because I'm a quote unquote like vlogger or whatever. That's the reason why I was asking. They want anyone with a small audience to go there and try to, boost up. Yeah, I'm just media. But still, I still don't know if I should go. What are your thoughts about tomorrow's meeting? I'm not a super macro guy. The important parts to me is, are we going to see a rate cut? I think that's almost guaranteed. I think the people that look at the, did he say likely, or did he say significantly, or did he say mostly, or did, what's the verbiage like? What's his color of his tie? Did he say something about Trump? That stuff for real is like It's just crazy to me that like we've brought investing down to that sort of level. Like feels. How did the meeting feel? Did it feel hawkish? Like, the last meeting, he said, "Hey, like the next the next rate cut, there's like it's not a foregone conclusion. We might not get a cut." I'm like, okay, but the data shows that we should definitely get a cut, and you've already said before that we were going to get 3 rate cuts. So like there's a high chance that we see a rate cut here. Now, if there's new commentary that comes out that changes as they get new data, sure. But the new data that's come out has only sort of solidified that we've needed a cut. So I don't get into the deep intricacies of macro. I find it's actually a waste of time. So if you're a trader, if you're taking advantage of those sort of things, it's not. But I'm very much in the Peter Lynch school of thought. Like if you spent 13 minutes looking at the macro, you've wasted 11 minutes. Yeah, good afternoon. And then the prediction markets just skyrocket. And this is true too. And I think that that's an important thing. It's like, I think early days of the next Fed chair will be so much more important than these ones because no one's going to even care what he says. People are going to care more about what Hassett has to say than what Powell has to say. Tanner's a true American, but is Canadian by circumstances. I mean, hey, we can't pick where we were born, but if I could, I would definitely pick America. It's definitely true. I think a lot of the world would. A lot of people like to talk crap from afar. Let's check crypto really quickly, and then I'm going to head out. Ethereum up 8% still. BTC is up 3.8%, back above 94,000. A lot of volume. Maybe that some of that volume is cooling off a little bit. Not as much trading. That is A-okay. So according to the new schedule, this is what we're going to do. I've got a video coming out today. I have another video prep that I need to record. That might be out today or tomorrow as well. And then I've got another live stream at 7. Hopefully, we do a show. Let me check the polls. Hopefully, we do a show at 1 p.m. and then another one at 7. That way, we can sort of get you guys that news the moment it happens, so we don't have to wait the entire day till noon of next to get that news out. So that'll be able to sort of update a little bit faster. I am 41 subscribers away from 60,000. If you guys are here and not subscribed, and you guys constantly show up to the show, consider subscribing. Yeah, you'll be more up to date on when we go live next. I'm subbed. Well, Tony, I wasn't just talking to you, brother. Thank you guys so much for watching, though. Holy crap, we just jumped up a ton of subscribers just in that one little thing. I'm only 26 away now. $24 away. Isn't that crazy? Thank you, guys. I do appreciate it. It's been a long journey getting to 60,000 subs. But as weird as all those big businesses say, like, we just feel like we're getting started, I honestly do feel that way. Like, this has been my dream. And the fact that, I'm watched by 60,000 people is such a surreal number. That's crazy. Thank you, guys. The next goal, let's do 100,000 in 2026. How about that? I don't know how early I'll be able to do it, but that's definitely the goal. Okay. Appreciate you guys. I was going to say subscribe, but you guys clearly already are. So just see you later. Bye.